So there are three keys to getting a mortgage. Number one is your credit score. Number two is your down payment. And then number three is your debt to income ratio, or how much home can you qualify for based on your income and your debts. This video, we're going to hit on the down payment basics. My name's Miles Pitcher. I own Superior Lending. Been in the business almost 25 years. Helped thousands of homeowners buy their homes, the majority of those first-time home buyers. So let's jump into this. So down payment is some amount of money you're bringing in upfront. Is typically a percentage of the purchase price, and the rest, what you don't bring in as down payment, typically is what the loan amount is going to be. Why does down payment matter here for us? Is it, shows your skin in the game, the financial commitment. It'll affect your loan, your monthly payment, and possibly your interest rate and mortgage insurance. We'll talk more about that in a minute. But, so as you go through this, think about it as a lender. If you were loaning money, would you feel more comfortable giving money to someone who has some skin in the game, large down payment, versus someone who doesn't have any at all? And you would reward that person who has down payment or a large down payment by giving them better interest rates or better terms on their loan. So here are some common down payment methods. The traditional conventional loan, everybody thinks you have to have 20% down. The truth is you don't have to have 20% down. You can have on a conventional loan a minimum of 3% down. If you own other properties and you're not a first-time home buyer, sometimes that's 5%. FHA, which does not mean first-time home buyer, it means Federal Housing Authority. FHA loans are great, 3.5% down. And then there's two other loan types called a VA loan for veterans or active duty, military, and then USDA loans. Both of those you can do with only 0% down. Amazing loans, but they have some restrictions on them that sometimes make it hard for people to qualify for those. Down payment can come from your savings, gift funds, from family members. We have to document that. Down payment assistance programs, we'll talk about that in a second. You can also pull it out of retirement account withdrawals or loans. A word of advice: if you have cash, like true cash, hidden under your mattress, that is very hard to paper trail and document. So get that into your bank account at least 2 to 3 months before you plan on buying a home. If you have cash and you don't have that long to buy your home, it's coming up fast, give me a call. I have ideas and other solutions to help you out, but get that in your bank account and get it seasoned. All right, down payment assistance programs. And I want to hit on a few key things here. These can be state, local, national housing programs that offer grants or second mortgages. A lot of people assume all these are grants that are forgiven. And there are programs that have forgivable grants. A lot of these have second mortgages, meaning you owe money to the first mortgage or first lender, and then the money they give you for the down payment, you still owe back to them. It may be at a 0% interest rate, but it does have to be repaid. Or sometimes if you live in the home for like 5 years, what they do is they forgive 20% of that down payment assistance every year that you live in the home. Many of these have restrictions, such as you have to be a first-time home buyer, you have to be under an income limit, and or you need to be in a certain area, a certain location. These are great in helping you reduce what you need for down payment. So if you don't have down payment, definitely check into these. But you'll hear me say it often, there is no such thing as a free lunch in the mortgage business. If you don't have down payment and you do one of these programs, they may carry a higher interest rate than you could get if you had your own down payment. So there's some pros and cons to these. We won't dive into them super deep, but be aware they are out there. It's worthwhile to ask about them if you're a first-time home buyer. All right. How does the down payment affect your mortgage? Well, higher down payment means lower loan amount, means lower monthly payment, and vice versa, the opposite. Again, if you are having a hard time to qualifying for a very large loan amount, obviously, if you come in with more down payment, it's going to help improve how much loan you can be approved for. And we'll talk more about debt to income ratio in an upcoming video. All right, saving for the down payment. You should talk to your loan officer early on and know what your target home price is and how much you need to save up. Create a savings plan, put it in a separate savings account, and then look into these employer or local housing incentives that are out there that can help with that in there. Again, you don't always need to have 20% to buy a home. You can check on different loan programs and down payment assistance. Just work with your loan officer and understand what you need and build a plan so that you're good there. I do want to add one more thing in here is hopping back here to right here. Okay, gift funds from family. We see more and more first-time home buyers getting family members gifting them down payment. This is phenomenal. This is awesome. It's a great way to go. There are some ways to make this very easy. So if you have a family member who's going to gift you down payment, please talk to me. If you have an employer who's going to gift down payment funds to you, talk to me first. But yeah, that's definitely a great option. So how can you get a hold of me? So here's my contact info. Feel free to reach out, ask any questions. We'll continue putting out some more videos here on first-time home buyer stuff. Thanks for watching.